All right, so much action from earnings to financials, so let's get right to the floor. Show traders joining me now. Dutch Masters from the floor of the CBOE, Scott Bauer. Dutch, great to have you. Scott, I want to start with you. Let's tackle the bank issues, though. Western Alliance, this is a regional that just a couple of weeks ago was going down the rabbit hole right behind Silicon Valley Bank, and take a look at it right now. It is popping about 23%. At the moment, more than that. It's very close to session highs. Does this give a sense overall that the bank problems are behind us?
I think it gives a sense of relief, Liz. And if you look just not at Western Alliance, but look at the KRE, which is, the regional banking sector, that's up 4% also today. So it's kind of across the board that you're seeing maybe not blowout stellar earnings, but what we didn't see, or what we haven't seen so far, is the catastrophe, is the devastating news of what may have been. So I think investors are taking a big relief to that and trying to make up, for some potential lost ground that they could have had buying some of these stocks maybe a week, 2 weeks, 3 weeks ago. So are we out of the woods? No, I don't think we're out of the woods, but the smaller, the regional banks, they're looking good right now. We have a lot more reports coming out over the next couple of days. But I also look at the big guys also, Liz, and here's what concerns me when you look at the JPs and Goldman and the Morgan Stanleys, and across the board, they were pretty decent across the board, not gangbusters, but pretty decent. But look at the loan loss provisions that they are now setting aside.
Yes.
They are setting aside,
ones,
in some cases,
billions.
50, 100% greater than they ever have. And why is that?
Well, because they're scared. And even though they say they're not seeing a tightening of credits or loans going bad, I think they do. That's just my opinion. All right, Dutch. Exactly. You don't care about the banks at the moment. Let's move on. That's what you say. In fact, you got a bunch of names here that you believe are really strong investments, and you've had such a great track record coming on this show quarter after quarter. So let's hear them right now.
Oh, okay. Well, I mean, we've been investing in Crocs, the shoe company. We've got VKTX, which is Viking Therapeutics, and let's see here. What else we have here? We've got Ferrari, and our big horse right now is Novo Nordisk, which is the only supplier of the biggest weight loss drug to hit the market in my lifetime, called semaglutide.
Yeah, I'm looking at some of these that you do like, and the gains are almost, I don't know, like I'm losing oxygen here because it's so thin up there, meaning it's so great. You've got Assure, is it Assure or Assure? Assure Software up 183% year over year. Viking Therapeutics is hitting a 52-week high. That one's up 683%. Oh, and by the way, Crocs is also hitting a 52-week high during this session, up 85%. You no longer worried about the bank situation, Dutch?
The bank situation is, we are taking a breather on it. There is a sigh of relief, and the big narrative right now is that, oh, what about the commercial real estate? That's going to be the next shoe to drop. And I think that narrative is way overblown, because let's face it, the banks are going to do and negotiate whatever they have to do to keep the loans performing. And sure, there will be some that go bad. They're already making reserves for that. But they're going to push the can down the road and make whatever concessions they need to make to keep the loans in the performing category.
Yeah. Scott, there is one thing that you have been watching and bird dogging, and that is very low volatility, except for those couple of weeks in March where people were completely panicked about the collapse of Silicon Valley and signature banks, which was certainly acceptable and understandable. But, we're looking at an S&P at 4156 that appears to keep getting its head smashed up against the 4,200 ceiling. Do we need to see higher or even lower volatility to get us there?
I think we need to see higher, Liz. And typically, when we're in a real low volatile environment, we'll see a grinding, a very slow-moving market. I think we need to get volatility back, though, to see a big breakout move. And the VIX, every volatility measures that is out there, whether you look at implied volatility in the S&P 500 options, we are at a low point since January of 2022. I don't understand it. I really don't. With all of the overhang in the marketplace, this market to me is ripe for a big move, and it can be either way. So volatility is so cheap right now. You can buy it whether it's on the upside, whether it's on the downside, to buy a big move protection. And as a trader, I am doing that by buying time spreads. I'm buying time. I'm buying June, July, August premium because it gets cheap. One thing of note I want to tell you, and I've got the VIX pit right next to me right over here, there is an immense amount of upside call buying today in the VIX, especially in the June options, like the 23 through the 27 strike. And if you look at the VIX futures curve right now, the June and July VIX futures curve is right around 23, 23 and a half.
Because we're at 16.3
so I think there's a
right
lot
now.
of retail out there also saying, you know what, volatility's too cheap here.
Yeah. All right, there's always a trade, and we love you guys for bringing it on every single time. Dutch, Scott, great to have you.